As always, this live show is for educational purpose only and does not constitute any investment advice. You trade at your own risk and with your own responsibility, and you're the only one responsible for your transaction. So, as always, we're going to do this live in several sections. We're going to start by reviewing the economic news, even though there's not a lot of economic news today. We are going to then look at the economic calendar and the different asset classes. Afterward, we're going to look at the S&P 500 from a technical point to try to establish our trade plan for the day. And then while we're waiting for the market to come to us, we will answer a few questions people ask us. And we're going to try to answer them the best we can. Today is going to be more focus about trading psychology, technical analysis, and risk management. So while we are talking about the economic news, today I didn't find a lot of economic news. Mostly the most important, like the biggest news I found that I thought was relevant was something about mostly Congo, the Congolese election from Congo-Kinshasa, where there's chaos, and I find it important because Congo-Kinshasa is a worldwide leader in several rare minerals that are needed to build PCBs and therefore phones and high-tech tech items. Otherwise, I saw an analysis, but and I like it, so I'm gonna basically try to show my perspective on it. But mostly it was. I will show it to you. Up, I'm coming. Where is it? Where is it? Where is it? It's here. It was this one, and basically he was counting Elliott wave, and he offered the count of the actual move with like the 5 Elliott waves, and I think it fits. And especially if you look now, I'm gonna show you on my on the 4 hour. Like I redid this count. And we can see like the 5 waves, and now we are entering, you know, like the correction wave, which is A, B, and C, and therefore normally the next step should be to go around there. More or less. So that's basically what he was saying in his analysis, and I, to be honest, kind of agree with him. So, yeah, that's for that. If we look at the calendar, economic calendar, so that's what's coming now. So let's see, economic calendar, it's there for the week. Mostly on Mondays there was not many news. Mostly some German one and some speech by European Central Bank leaders. Then on Tuesday was another speech, and then the CPI for Europe that came back worse than expected, but better. If we take in consideration the actual situation of Europe with a lot of inflation and inflationary context. So which it means the price decreased more than what was expected for the period. And then afterward, we had the building permit and housing start, and we can see that basically there was like an increase in the overall housing market in the US because there was some new, there was more than more new. There was like building permit missed the expectation. It might be a bit weird to understand the way I said it, but basically we missed the expectation for building permit by 10, but we exceeded the expectation on housing by 200. Therefore, if we take the average, the housing market in the US is in pretty good shape. If we look at Wednesday, we got some CPI in UK, some PPI in Germany, consumer US consumer confidence and home sales. So we see that the market was higher than expected, but there was a huge decrease in the oil demand. For today, mostly there was the jobless claim as well, the continuing jobless claim as well as the initial jobless claim. So we can see there's approximately 2 million unemployed people in the US that are now getting the unemployment benefit. And basically the GDP is worse than expected for the US also, but it's still an increase compared to previously. Oh, I've got 1 FPS, nice. And tomorrow we mostly have PCE and some UK stats and also some home sales and yeah, like every Friday. So if we look at the different asset class, I'm gonna today talk a bit about wheat because I've learned some stuff. So let's start by the bond. We can see, not especially the US 10-year fell sharply at the open, because when I looked this morning it was stable at 0%. So basically the open was a big buyback of lot of people bought some 10-year bonds. Same for basically most of the bond, either French one or German one. There's only UK one that are still where the yield are climbing, but we can still see that the yield are way lower than they used to be, especially US one. Like 1 month and a half ago, 10-year was 5. Now it's 3.8, and it's gonna go down following the Fed rate decision. Then if we look at equity, we can see that Europe is mostly in the red. Like is in the red, is slightly in the red. Either DAX, Eurostox, CAC, FTSE. Asia is mostly in the green except Nikkei, but it got back overnight. And if we look at the US, it's green across the board, with the VIX that is stable around 13.5, but slightly higher than yesterday. And if we look at the US, at the US index, I'm gonna put actually the other screen. This one is better to show what I want. Like we can see that yesterday there was a huge fall of the market. Like we can see that the Nasdaq lost something like 6,000 points. Now 6,000, like 100 and no, well, 300 points. Yeah, something like 300 points. And the S&P lost almost 100 points, 80 points, something like that. So we see that's basically like a big moves made by both market, and there was several explanation that was offered by either the media or everything. There was first the expiration of a VIX option that was basically propping up the market. C'est quoi ce truc là? Ah yes. Ok, d'accord. So the VIX market, that was like the VIX option that when they expired propped up the market. And there was also another explanation that people were basically taking their profit from all the previous months rally, where that was quite continued rally, while so that was the two explanations I found this morning for this sudden move and change of heart of the market yesterday night. But I'm not that confident this is either of those are an explanation. I do like the people taking their profit. Seems to me the most and by doing so, triggering waves of stops, and therefore of people that wanted to go long and then triggering each of their stop, which then caused them to sell the market, to close their position, then pushing the market down. That's basically my explanation of what happened yesterday. But I might be wrong. It's only my opinion. So that, if we look at Forex, where is it? It's on this screen. Yeah, it's here. I'll come back here. We can see that Euro GPY is still on the way down. So GPY is actually still getting stronger, like on a strong momentum compared to the dollar, even though December is a season where dollar tend to mostly fall. It's the worst month for dollar, and January is the best one. So that could also be an explanation. We can see that the Euro USD is at the 110 level. If we look at several times, we can see that's been already like 3 times that we've been pushed back. But come on, I just have to say that so that he goes through just in front of us. That's it. Allez. Well, and basically we can see, if I'm going to show you here with the future chart on Finviz, when that basically we can see that the dollar future is really going back down, where when the euro is going up, the GPY is going up, the GBP, basically every money are going up except the dollar. There might be also, talking about commodities, so gold is still stable around